All righty, good morning, everyone. Welcome to the trade findings and adjustments for the 5th of August. That's where we're at. Today, I'm going to bring up a couple points in helping you better understand how to help yourself on better understanding the stock market and how to place and when to place your trades. Now, obviously, you don't have the ability to, to outguess the market. So that's why I typically always work on, hold on one second here. I always look at the worst case scenario. As I'm looking to do things, if I can do the worst case scenario, that tells me that I know the worst case scenario on what could happen to those positions. A lot of people go for the best case scenario, which is also a little scary. With that said, one thing that we're forgetting, and this article is old, it's April 23rd of 2021. One thing that we're forgetting right now is that we still have two things coming up. Two things coming up that can seriously move our markets lower. Any idea on what those two things are? That's not what I wanted. What two things can move our markets ridiculously lower? And it's rather important that you know what those are. That's the whole idea of doing your research, not following someone else, because if you are just following someone else, then it's your fault if things go down, not their fault. But there are two things there we go. There are two things that are huge risk to today's market. And number one, pretty easy, is the Fed budget, right? The first one you guys had mentioned, I see some things coming in here. Inflation is one, but inflation's out in time. And I saw three of you that said inflation, Fed budget, and raising the cap. Of course, they're not going to have their federal budget balanced. They always need to borrow more money. It is absolutely ridiculous. I wish I had the budget that they have, to be honest with you. If I did, man, holy Toledo, life would be so much easier. But raising the cap on the budget that the Republicans and Democrats are arguing over right now. And then number two is tax increases scheduled to be put into place for next year. And in all honesty, the Democrats have the rest of us over a barrel. If the Democrats want to raise those taxes, they've got the deciding vote in the Senate. They've got the majority in the House. They are going to be good to go, and there's nothing we can do about it. So, with those things said, the worry is the next quarter will be down due to employment. September ends, can't spell it right, ends the extra Fed, what's the word I'm looking for? The extra Fed unemployment payment. So people have to get back to work if they want to make the money that they thought they were going to make. That is just what we are up against. That's just the way that's going to be. Now, the problem here, the problem is inventories are at a historic low. And that equals houses. That equals material goods, products. Apple warned that they might not make as much for their phones. We have all kinds of issues coming up all over the place in regards to there's not enough inventory to give us our typical Christmas rally. Our Christmas rally is in jeopardy right now because companies don't have the typical Christmas rally inventory to sell. You can't have a Christmas rally and a spike in sales if you don't have the product to sell. So we're going to run into a problem. We're going to run into a problem that the Christmas rally we planned on having will most likely not materialize because the product is not there to sell, and you won't see the spike in earnings that initiate that Christmas rally. Not to mention, historically, the worst months, September, October. So just by way of a business cycle, companies do not so good this earnings as they're building that inventory for their Christmas rally and their Christmas sales. So already we're going to have a more limited Christmas rally this year because of unemployment and too many people are not working. And if I can throw in the last thing, COVID shutdowns are happening. It was unbelievable. As I looked out on the California coast, I counted no less than 20 tankers, huge ships with all kinds of inventory on them that were not getting unloaded in California, and California is starting to shut down. Las Vegas area, very mask heavy, and it's going to be interesting if we see mandatory vaccinations to work, and if we see an uptick. Well, we're already seeing the uptick. If we see the Democrats do what they did to President Trump and initiate these shutdowns again, we're already having more cases than we had at the peak of last year. The good thing is, though, the death total is about a third. Well, it's only 40% of what it was last year. I've got an answer to that. If the hospitals weren't counting people that flew through windshields and died in car accidents, maybe the totals last year would have been more accurate. Something to pay attention to. Something to pay attention to is going to be the capital gains tax or the raise in taxes. I worked the numbers right here so that you could have an understanding of what those numbers are going to be. The last time capital gains taxes were hiked in 2013, The wealthiest households sold 1% of their equity assets. The Goldman analysts found, according to the Federal Reserve's distribution financial account data, the top 1% held $17.79 trillion of equities and mutual funds in the fourth quarter. Simple math here, right? So a 1% selling a stock this time would be $178 billion selling off of our market. $178 billion could disappear and evaporate as people sold stocks for capital gains, profits, and to pay their capital gains. Something else is being floated around right now. They want to tax you yearly. If you have a net wealth dollar figure that they consider rich, they want to tax you yearly on it. Hey, if you've got $203 billion like Bezos, every year on your net worth, you should be taxed somewhere in that 1% to 2% range. For me, that's ridiculous. We've already been taxed on that money. Talk about double taxation. Why would you be taxed again on liquid net worth that's held on a stock position that fluctuates where you haven't truly booked a gain? If you haven't truly booked a gain, then maybe it's not that important to tax it. It's ridiculous. The IRS wants to tax us on phantom income that hasn't been a booked gain, on a variable net worth. Man, I just see that absolutely destroying the market. I would not want to see that happen. I found a very interesting YouTube video. If you want to see how well Kathy Woods is doing, how much money she's losing, this is the video for you guys to watch. I'm going to include it I'm going to include it in this link so you can see it. Just a little something to pay attention to so that you can understand more about China. It's about a 9-minute video, something to look forward to understand what benefits you could receive from China here in the near future. With that said, a lot of people ask me, Kevin, if you were looking at a trade the other day, you mentioned Disney. And I said, of course, Disney was, if you have the position, go ahead and get into it. It was a couple days ago, so here we are looking at a bounce off the 200-day. We're being held down by the 50, and really what I'm looking for is nothing more than an earnings event coming up. An earnings event coming up because we can get to some ridiculous numbers with movies opening up. All these movies that are already made, that'll be profit, that are expensed on Disney's, last year's taxes and so forth. Last year's earnings is what I meant to say there. We could see a fabulous return on Disney. Kevin, what are the risks on Disney? Well, the risks are that you run into some type of continued shutdown of their theme parks. That killed Disney last year, right? They still haven't opened up the cruise lines. So there's a lot of opportunity here with Disney just getting back to a normal business cycle with what they're doing. They've made some great money. They've opened up the California park. They're still doing okay in Miami or Florida, excuse me. So there's a lot of opportunity here for Disney. I would suspect that they'll have a great earnings because some movies have been released and because they've opened their parks. That is my premise on why I suggested last Tuesday, hey, you may want to look at Disney at rolling some positions up. In our account, in my account, we added the January 23 200s for about, I think it was $12. They're now worth $14. There's plenty of opportunity to get into Disney. Let me see where my orders are at. Disney filled at $12.25. Well, Kevin, they're now at $14. Yes, they are. And a $14 cost basis is higher than $12.25. But there's plenty of opportunity in Disney to make some pretty good money based on their next earnings event that's coming up, I believe, next week. Let's find out when Disney has their earnings. If I take a peek here, earnings the 12th, confirmed, the 12th next week after the market closes. There is plenty of opportunity here for Disney to make a killing. And you can call it making a bet, but there's a huge opportunity here for Disney to go significantly higher. Disney's down because of COVID. Disney is not down because of their earnings. That didn't make sense. Let me try that again. COVID has hurt Disney. So by COVID hurting Disney, it doesn't directly reflect the earnings that they're currently making. So they have all kinds of opportunity to bounce back and to bounce back up to 200. Right now would be a very good time to take advantage of Disney while they're down. I would take advantage of Disney, again, using that leap long call. What is that? That's a stock replacement strategy. We have the right to buy Disney at 200. It can cost you $14, so your break even is $214. And by having your break even be at that price, you're in good shape. Disney by the end of next year should be trading closer to 300. So I'm not too worried about what Disney is going to do into the future. I think they have an opportunity to knock it out of the park. I'm going heavy into Disney. I'm doubling down on Disney. I think we're going to have an opportunity here that we can do really well in. And by doing really well, I need to put my money where my mouth is. So that's what I'm looking to do. I'm looking to add a little more position into Disney and to see where we end up for everything. The 200 calls is the right to buy the stock at a certain price for a certain period of time. That price is $200. Again, I would expect Disney to trade well above 200. In fact, I think it's 296 to 310 is a general range where Disney can go to. Most of that is prevalent on parks opening up, cruise lines opening up, and their movies coming out again. I know Scarlett Johansson, as of recently, has got pissed off at Disney because some of her extra checks are based on the opening of her movies. And she's like, you opened it on, Disney Plus. Well, that should count towards those openings. So it'll be interesting to see in general if she gets paid or where her lawsuit goes. But she should be in good shape. She shouldn't have an issue or a problem one way or the other. So Disney's my plan. I would be going in on Disney for their earnings on the 12th. I'm going to pay attention this next quarter to things that are coming up that could be a detriment to our portfolios. And do you guys have any questions? Any questions I can answer for you in general in regards to how we're trading portfolios and what we're looking to do here in the near future? Other than I'm bullish towards Disney, so I'm pushing money into Disney. William, good question. So what if you're wrong about Disney? Again, it's not a matter of being right or wrong. I have until January 23rd. So if their earnings are not good today, I have until the January of 2023 that they have to take off. January 2023 is when I'm going to expect to see Disney moving higher between now and then. That gives us a year and so we're in August, September, October, November, December, January. That gives us 18 months for Disney to move higher. And when we say higher, they've already traded at the 210 range. It's not like it's a huge amount higher. We're just getting back up to where they were previously, and we're going to be okay on Disney. So yes, it's a long-term trade, which lets me look over short-term thinking. So because of that, I'm good. Would I still get into more Disney today? Yes, definitely. And you can nibble. For $1,400, you can control 100 shares of Disney and do so for the next year and a half. No brainer. I see something on sale. I would be investing in it. It just, that's what I'm doing at this time. Good question. Are there any other questions you guys have? If they're not, guys, I look forward to seeing you next Monday. Take care of yourselves. Hopefully these are helpful, where you're getting to see more of my mindset, what I'm looking at, what I want to make sure I understand, what I worry about in the future. And again, last time I'm going to mention it. If you're placing a trade every single week or following someone that's placing trades every single week, you're probably not doing what's in your best interest. There are times that are great for investing in the stock market, but to think you can find something every single week is a joke. In real life, you need to have a discipline set aside for following and tracking your methodology or your investment strategy, which clearly states that you don't trade every single day, you don't trade every single week. You've got to be smart about what you're doing and what you're thinking. Does that mean you might not outperform the S&P for a period of time? Of course it does. But that's what sticking to the discipline does. Sticking to the discipline gives you the ability to beat the S&P over a period of time. And hopefully your period of time isn't so short term that you're in and out of trades daily. That is not how you invest smartly, or intelligently would be a better way to say it. Guys, I appreciate you being here. Look forward to seeing you next Monday. Have a great weekend, guys. Bye-bye.